You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And joining me to help break down all things volatility this week, we got a fun cast of characters, starting off with, I believe, in the global headquarters of Carmen Line, or if not, perhaps in an elevator near you. He is a greasy meatball, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Greasy Meatball, good. How are things going, sir?
It's good. It's a beautiful sunny day outside. I'm between buildings right now, but I got to say, this is some interesting volatility going on right now.
I often find the best place to do shows is not in buildings, but between them. It's just the best. Yes, exactly. And you know what's between buildings is the S&P 500, which is getting punched in the face today. Yes. And the kind of spastic market over the last couple of days has been interesting. Yesterday, all is well. You know, it's the market. It looks a lot like the Kevin Bacon in Animal House. You know, yesterday all is well, and meanwhile, little did we know that an inverted yield curve was going to essentially ruin the homecoming parade. Yes, the big dog of the inverted yield curve. We'll get to all that goodness in a minute. It's easy for me to say, in a minute. But first, let me welcome on the rest of our compatriots here on the Vol panel. Let's go all the way off now, all the way across the pond and down a bit to Australia, where we are joined by Simon Ho from T3 Index. Simon, welcome back to the program. Thanks again for getting up early to talk some volatility with us.
Oh, it's my pleasure. I couldn't think of anything better. Love it.
There truly is nothing better. You are correct. So you're on the right show from that perspective. And also joining us, a newcomer holding down the MIAX hot seat today, we've got John Smolin, the Executive Vice President and Head of Exchange Traded Products and Strategic Relations. He's got a very big business card for MIAX. John, welcome to Volatility Views.
Good morning or afternoon. Thank you very much. I'm excited to be here. Talk volatility.
It's got to be hard. It's got to be hard to lug that enormous business card around everywhere you go, John.
Oh, I just say, yeah, I work for MIAX. So it's. I think at my advanced age, people just assume I forgot the rest of my title.
Well, you've obviously been in the options, in and around, I should say, the options space for a while, but it's your first time actually on this program and indeed on our network. So with all of our first timers, why don't you go ahead and give our audience a little bit of an overview of your background in the options space and what it is you do over there at MIAX.
Sure, absolutely. Thank you. Long-time options trader, started way back my career in New York on the American Stock Exchange, came up as a market maker and a specialist, moved to Chicago in the mid-'90s, was a DPM there, had my own shop, sold that business and moved to Spear Leeds. And then Spear Leeds was acquired by Goldman Sachs. And from 2000 to 2011, I ran Goldman Sachs floor trading businesses out of Chicago. I was also on the SIBO board for 10 years. I was the member vice chairman in 2006. And when the business at Goldman eventually went completely electronic, I retired from the firm in 2011. Took some time off, but in my time at Goldman, I'd really learned the exchange business and become, pretty skilled at it and had a good feel for it. So I started a consulting firm in 2011 with some former Goldman colleagues called Quibinet Capital. And we focused on market-making firms and exchanges. And we did a bunch of work. And that's where I met Tom Gallagher, MIAX's CEO. He brought me in as a consultant for a year. And then, I liked the vision. I liked where the exchange was going. And he asked me to join him. And I've been with them for 3 years. And, today I focus entirely on the forward, new products, joint ventures, leveraging MIAX's technology and its skill set to see how we can get in a lane by ourselves. And that's how I met Simon. Simon connected with MIAX in July of 2017. He was looking for a partner for Spikes. I knew about it. I knew about SIBO VIX from my time there, and I recognized that being in that space would be really good for MIAX. And Simon and I connected pretty quickly, and in a matter of 3 months, we had become partners. So, and that's what I do now.
So you're to blame. You're to blame for bringing the monster that is Spikes to MIAX. It's all your fault, sir.
It's going to be one way or another. Either I'm going to I'll have a statue erected after me, or I'll be hung in effigy. One way or another, it's gonna work.
There you go. That's a good outlook on it. I like it. All right. Speaking of outlook, let's get to it with our outlook on today's activity in the week that was. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we kind of just review some volatility, the trades, the trends, the analysis, unusual activity, all that fun stuff across the broad spectrum of volatility products. And the meatball kind of alluded to at the top of the show here. Not a good day for the bulls out there. Good day for the volatility bulls. Not so much for the broad market bulls. We're seeing a pretty broad-based sell-off hit most of the major indices. It got sparked by some weak economic data coming out of Europe. The purchasing managers out there in the Eurozone looking pretty weak. That kind of set the ball rolling downhill. Got some more weak data coming out of the U.S. that compounded everything, and then everything really seemed to hit the fan. People have been talking about this and watching this for a while. It was threatening to happen, but not really happening. Happened today. We saw the yield curve finally invert to the dark side there. We saw the 10-year inverting with the 3-month T-bill, first time in over a decade, since 2007, and that really seemed to cement a lot of people into sell-off mode. That's a pretty widely held indicator that perhaps there are some recession area symbols and the recession lurking there on the horizon, and that spooked a lot of people. So that exacerbated the downside. Of course, there still are lingering concerns over the trade deal. Trump's been saying many different things about the deal, saying they're close, but they're not there yet, and also warning that the tariffs may remain in place for a substantial period of time, quote unquote, even after a trade deal is reached. So all of those things combining. Of course, we had a lot of broad rallies in the market as well, so probably a little bit of profit taking going. All of that combining to drive us all into the red today. S&P actually a bit of the Goldilocks, off about 1.6%. The Dow off about around 1.5%. Tech-heavy NASDAQ leading the charge to the downside, off north of 2%, about almost 2.2% out there. So it's kind of a bit of a bloodletting out there in the tech land. And all that red on the screen means some green on the vol screen coming into showtime. We were seeing spikes just shy of the 17 handle. Let me pull up the latest quote. It was about 1687. So that's up nearly 5 handles from this. Actually, it's come off a bit since even before the beginning of the showtime. It was threatening 17. It has come off now. It's right about 1610 or so right now. So it was up about 5 handles from our last show. Now it's up a mere 4 handles from the last show. VIX Cash right around that 16.5 level. Hasn't really budged much over the better part of the. Actually, it's ticked up a little bit, threatening almost getting up to 16.75 there. But that's up around 4 points from where it was this time last week on our old friend VVIX. We said it before on the show. Whenever it starts trending towards that lower portion of the range, like 75 is typically the bottom, but whenever it starts threatening that, and it got down to about 80 last week, that's when you kind of have to start paying attention. Maybe things are going to start rocking and rolling. That's exactly what we saw this week. VVIX around a 98 right now, so it's bounced 18 points since last show. So a lot going on out there in the volatility space. John, you're our first timer here, so we'll give you the dubious honor of going first. You can talk about all that fun stuff too, but if you want to start, because I'm kind of curious, I know a lot of our audience is as well, before we get into all the stuff going on today, you guys had your first official settlement go on this week, so walk us through that. How did it go? Were there any hiccups? How did that process unfold?
Yeah, no, it went really well. We had no hiccups. The technology and the systems that were created by our back office team was flawless. It's very transparent. It's right on our website. You can click right on it and you can see how the process works now. We are kind of in a slow start as we opted to start the product before the future was launched, and we've got. So our open interest is slowly growing, and trading it will increase over time. So we didn't have a big settlement auction, but the process and the settlement process worked really well.
So you're saying there were no aberrant prints, no strips of crazy puts going up, nothing out untoward like that going on, John?
No, that's the beauty. One of the real benefits of the way Simon designed the product, having it built around the 15 or 16 markets that police spy options. It's very hard to get. I think, Simon, you referred to them as bad characters, and so it went really well.
Well, I'm glad to hear that. We'll get Simon's view on all that fun stuff in a second. But like I mentioned, it is your first time, and you did spend a lot of time in the trenches of the option space. So we're seeing this very topsy-turvy volatility market. Vol's back, then it goes away again very hard. Then it comes roaring back to life equally as hard, if not harder. So I'm curious, what is catching your eye out there right now in just the broad volatility space, all this Sturm and Drang in the volatility market right now?
Yeah, I think, it's kind of when you look at the macro market and you touched on a number of things, but certainly the market has had an extended run. The president is certainly putting himself out there every time he decides to tweet away. And China, and you're seeing, businesses that are really being started to be really impacted by no deal with China. And, it's only so many months in a row that you can see those type of losses and see the market go up as it has. And I just think, seeing the market pull back, some percentage. And again, we're an exchange. We're not a trading shop, but seeing volatility come back to the market, it's not surprising at all.
Mr. Meatball, I was talking about this with your compatriot yesterday, the Rock Lobster on Option Block, and we were kind of both musing that we were starting to get to those levels out there in volatility land where, you might want to start thinking about closing out your shorts. Just in general, looking at a broad snapshot of the feedback we get across our program, particularly this one, just starting to look at how many people were starting to flock back in to those short vol trades like the VXX puts and everything. Once it broke the 30 handle, it was getting pretty hot and heavy out there. So that maybe was another indicator that maybe we were due for a bounce. And then sure enough, that's pretty much exactly what happened. So what's been catching your eye in this topsy-turvy vol market this week and today, sir?
Yeah, what a range we're going to have on the week. Hey, where was the official spike settlement on this week? Do you guys know what the official
Luckily,
settlement number was?
Luckily, we have my ex hot seat to tell us that exact info. John, do you know what the exact number was?
I'm going to defer to Simon. Simon, what was the exact number again?
It was 12.41.
12.41, VIX 1235. Yeah. So right now we'll have seen the two major volatility indexes. You like that? Spikes is officially a major volatility index in my book. Now having almost a 5-point range. That's saying something.
It is fascinating that they both kind of settled pretty much at the low almost, right?
Yeah, it's a huge. Yeah, no kidding. And I'll tell you, talk about dumb luck. On Monday, I bought some VIX 13 puts, thinking they were going to settle on Wednesday, and then I forgot we're closed for Good Friday in April, so settlement was Tuesday, and dumb lucked my way into 65 cents.
Better to be lucky than smart, sir.
Yes, the sun shines on, as they would say in Australia, the sun shines on a dog's arse every now and again.
They call the dogs dingoes down there, sir.
And then just the way VVIX has, and the Viking for that matter, have been just slowly rallying, and they're now starting to show that when those two indexes get to below into the 70s, if you're not a buyer, you are just not somebody that gets volatility, and you're somebody that's basically a VIX, a volatility tourist. You're not a volatility trader, and we saw that those were the times to buy strangles and straddles and things like that, and do exceedingly well in the VIX contract. The one thing that actually did strike me today was how VIX futures, through this huge pop, stayed in a contango. And it tells me that the VIX futures were buying the increase in volatility, which, I don't know if I'm with that per se, but I did think that was interesting that, we were able to go from basically like 1380 to over 16 without seeing any type of like a true flat yield, flat VIX curve. And it just shows you how I think kind of knee-jerk reaction-y we were to the 3-month trading over the 10-year. And, maybe this will be a good question for everybody, but, in the past when we've seen the 3-month over the 10-year has been 7%. Or 7.5.
Yeah, it's nowhere near as anemic as it is now.
Yeah, does a inverted yield curve with the 10-year at 2.4, is that even remotely related to? And I want John and Simon's opinion on this. Is that even remotely related to an inverted yield curve when the 10-year is 14%? I kind of want your guys' opinions on that.
Simon, have at it, sir.
Yeah, well, I think you make a good point. For me, on the first point you made, I'm not that surprised that the curve is still sort of in contango. Like it is most of the time, obviously, and I guess it's flattened somewhat as a result of this pop. But even now, we're seeing since the show started and now the actual cash has already come off. Now, in terms of that question, I'm not so sure. I think it speaks to the larger issue here that, rates are so low. Just world. And at some point, I've always felt that something has to give. I mean, the bond went below, below par today in terms of yield. You've got the inversion. You've got
we had as I like to call it, German NERP today.
Right. Yeah.
German
exactly.
NERP.
So,
you like that?
I like it. You should trademark that. So I think that this is not a positive portend for the global economy. I mean, at the end of the day, we've had a very impressive rally to start the year, so 21% in SPX. And I just think the market's going to have to do some catch-up here because the outlook isn't that great. We talk about all these things, trade deal, tariffs. I mean, those things matter. And, China's debt situation has gotten worse as they're trying to, stop their economy from stalling. Debt's high everywhere around the world. I think one of the things that caught my eye this week, particularly on the interest rate side, was I saw an article talking about the fact that volatility in U.S. yields was the lowest since 1965. If that's the case, with the backdrop that we have and the amount that we've rallied, it sort of seems to me like it might be an ideal opportunity to be buying volatility of some sort.
I'll mute you quickly so Don Schlesinger doesn't hear that and get outraged. But in general, Simon, it has been a crazy week. You kind of just touched on some of your thoughts, but before we dive into what else is trading right now, I'm curious. We got John's thoughts. This was a big week for you guys. This was the first ever live settlement of this baby you've been working on for I don't know how many years now. So walk us through it. What were your thoughts on the settlement? How did it go? And also on the performance today. Like I mentioned, it's kind of been moving with a little bit more zest to it than we've seen with VIX Cash. It's kind of been outperforming. It was up, about 5 handles coming into showtime when VIX Cash was up about 4. Now it's come off a handle while VIX is rallying. So has the performance today also been kind of in line with what you're expecting? And then what else is catching your eye out there in the vol space, sir? Oh, I think I scared him with too many questions. Too many questions at once.
Is that for Simon? I think that's for you. What do you think?
Look, I think it's behaving sort of. All parameters are pretty normal. I mean, the Spikes Index itself has been is created in a similar fashion to VIX, so you wouldn't expect it to depart too much from that value. Obviously, there are some differences because the underlying comes from SPY, which is an American style option. So there are. For the most part, this thing is 99% correlated to the VIX. There are periods where there are differences, though. For example, at each quarter there is a dividend in SPY, so that can make a difference. But generally speaking, on a macro basis, the statistical properties of the things are pretty much indistinguishable, apart from, say, 4 points during the year. In terms of how everything went, I mean, couldn't be happier. I mean, one of the key components of why we built Spikes was, and sort of the things that we were looking to do here was to create an auction that, gave people confidence when they traded their volatility products. And that's, I think, a huge thing. I mean, we've had some difficulties in VIX over the past year. I'm not going to get into those, but the point is that we, as a second player in the market, have an opportunity to try and, do things in a different way. And we're very, very confident that, doing it this way will mean that it's bad actors can do less to sort of influence the outcome here, and that's got to be good for volatility investors. So very pleased with how it went. It was a very big focal point of the market. Ever since we launched, everybody said, look, the first thing that we're going to be looking at is to see how the auction goes, because it's such a critical component to the whole architecture of the system. So super pleased about that. And now basically moving forward, there's going to be a whole bunch of things that we're going to be drip feeding into the ecosystem to make it better for investors. And that's always been the goal.
We were talking earlier about, VVIX and I'm hard-pressed when I think about it. I'm hard-pressed to think of a more effective indicator in the volatility space than when that starts to threaten into that 70 handle. I can't think of any extended period where it really stayed there for very long. So in terms of effective leading indicators, the volatility of volatility has proven to be a great one, which brings me around again. We talked about it before. I think you mentioned it before, but give us an update on what did Mark call it, the Viking. When can we expect to see the volatility of Spikes go live, sir?
Right. So the volatility of Spikes, or as you said, Meeple is cordoning off the Viking name. It's It's going to be pretty soon, actually, because obviously the deeper the options prices become on spikes, the easier it is for us to do. We do need a reference underlying, so that's also coming. So we'll be disseminating a streaming sort of combo price, which is effectively going to be what the futures will be when that comes later in the year.
Well, there we go. Yeah, I'll be curious to see if it's as effective, if it's as useful as VVIX. It's going to be a useful indicator going forward. You mentioned the futures, Mark, kind of not really staying in contango, not really going crazy back. They went slightly back. We're coming into showtime. We think we saw a little bit of a premium out there, slightly. The cash had a little bit of a premium to the front month future. That was really about it. And even now, coming into halfway through into the show, that has already dissipated. We're seeing the cash about a third of a handle shy of that front month future again. So we're seeing the cash, as it is wont to do, it's moving all over the place. The futures kind of reflecting the cooler, calmer, saner heads in the volatility space, not quite going as crazy. And we're seeing that same contango holding out there, got flat ever so briefly. And then now it's kind of getting back to its usual land of contango. Let's dive into what are the big positions out there in the volatility options this week. Looking at spikes coming out of the settlement, it seems like that longer term vertical in May. Those people out there were savvy to put a longer term one out there. It was the 2025 vertical. Not quite at those levels yet, but certainly a lot closer than we were a week ago. That still remains the number one size open position out there in spikes options. Obviously, a few came off the board with the recent settlement, so we'll see how that affects things. And we are, of course, waiting for that underlying to go live. I think that's going to drive a lot more players out there. Speaking of players, let's see what players are trading out there in the VIX options today. A fairly active day, I think you could say. About 426,000 contracts on the tape coming into showtime. The ADV about 570,000. The ADV's up since our last show as well, about 20,000. So that reflects that the vol space has seen some action over the past week. In terms of what's lighting it up out there in VIX options, let's do our top 10 breakdown really quickly. You have a couple of puts out there, but a lot of calls this week, as you might imagine. Number 10, the 845s, 227,000, open there. Number 9, the May 37 halves, 230,000 open. Number 8, the April 24s with 233,000. Number 7, the April 30s. Always have to have a 30 in there somewhere. And this week, it's the April 30s. 268,000 of those. Number 6, the April 26s, nice April call strip here, 271,000. Number 5, the April 20s, 324,000. Then we get to the first put on our list, the April 12 half puts, 388,000 of those bad boys open. Number 3, the April 13 puts with 422,000. Getting into some decent numbers here on the OI now. Number 2, the May 27s with 432,000. And number 1, I believe this is our old friend, the whale from last week. He's making his impact felt on the top 10. The May 25s, 481,000. Nearly 500,000 contracts open in that one position there alone. A total of about 8.7 million contracts outstanding, about 6.65 on the calls, and about 2.06 million on the puts. Fast forwarding to today's action, as you might imagine, today's action on the vol space was all focused on the upside, at least in the near term. In the beginning of the day, we saw the biggest trade out there in the VIX options today was the aggressive sweeps of the 835s coming in for 19 and 18 cents for a total of about 65,000 coming into showtime. So someone really wanted to get themselves some calls. Of course, that's a lot of OI on that strike, like we mentioned. So it's hard to tell. That could have been closing, maybe someone scrambling to close out some shorts to the upside. Either way, 65,000 of those bad boys printing this morning. We also saw AUG, a little going out to AUG, a little bit of a chance to maybe take advantage of this blip to harvest some upside premium in the term of the August 30s, going up almost actually a little north of 16,000 times for 72 cents right off the bid on that one as well. And that wasn't enough upside for you. It looks like we saw maybe a little bit of a roll of the April 45s, 12,000 times out to the AUG 47 half. So rolling out and up. Again, 12,000 times, picking those up for 26 cents. So keeping the upside love alive and going out to August a little bit, which is kind of fascinating. Mr. Meatball, any trades out there this week really catching your eye in the vol space, sir?
Yes, the trade of the year, maybe. Customer.
Trade of the year?
On maybe so far. Customer on Monday, I don't know how he did it. He bought like 25,000 of the April 18, 22, 26 call flies, paying 17 cents.
Wow.
I saw that print, and I told Tubby, I go, buy me 250 of those.
Buy me all of that.
And he went, they're at a quarter. And I still wish I would have bought it.
I said, even for a quarter, yeah, that's not bad.
No, but 17 cents. I don't know how he got those done electronically, but that thing went up. And, my understanding was everyone was like, how the heck did that get up? But
he knows somebody in France. That's all I'm going to say.
That customer is a happy camper. So kudos to you. Also continue to see a lot of kind of risk reversely type stuff going on. Short puts long versus long call spread. Saw some interesting kind of bear back spreads going up in VXXB, which we haven't gotten to do. They're just paper continues to be kind of one-sided. May 17, 24, 1x2s, stuff like that. But that trade, that butterfly was, in terms of large block customer paper, that was the best trade I've seen this year.
That's a pretty well-timed one, shall we say. Sometimes when we do the show late in the week, it's hard to get, so much trades go up between Monday and Friday. It's hard to get all the way back to Monday, so we don't always get those in our rundown. But I want to go dig that one up and check it out for myself, because you're right, that is, shall we say, some well-timed upside. Simon, any trades out there, any activity this week really catching your eye across the broad volatility space, sir?
Not specifically. Obviously I don't look at it as closely as Meatball being down there, on the floor. One thing I did notice though is that in general, the indicators are still pretty lit up as green on that sort of cashback classes across asset classes, and in equities in particular S&P, the call side, $25 calls are actually pretty darn cheap. So volatility is still not expensive. I mean, we're talking 14% quantile, so really towards the very bottom end of the entire history that this has been going, which is well over 20 years. So it's reasonably interesting given what's going on now.
And John, I know you spend most of your days these days in the day-to-day mechanics of rolling out new products, but I don't want you to feel left out. If there was some activity or maybe some general trends that caught your eye in the vol space this week you want to share with us, have at it, sir.
Yeah, I like Simon said, I'm not that into the weeds on the exact trades that are going on the floor, but I am out we're beginning to talk to the institutional side about spikes, and there's a lot of discussion going on, and there's I wouldn't be surprised if we got to see some RFQing going on around about some institutional stuff and spikes in the coming weeks, which would be exciting to see how the market embrace that. But not much trade to trade, but we are out pushing the idea of looking, and people are looking for sure. So it's exciting for us.
Speaking of looking, people are looking laser focused on that 30 level out there in VXXB. I'm still not used to saying that VXXB. It's just not a good moniker. They need to get rid of the B. But that's a conversation we've had before. We won't belabor that point. But VXXB had a strong rally coming into the show. It was at about 32, which was about 4 points higher than where it was this time last week. But if you were patient, it's given a lot of that back now at about 30.6 or so out there right now. So still north of that 30 handle, but nowhere quite as aggressive, shall we say, as it was a few points ago. In terms of what's lighting up the tape out there, coming showtime, looks like there were about close to 100,000 contracts on the tape. Let's see what the big prints are out there. Let's see. The number one print out there, the 80 calls, nearly 30,000 of those open. So there still is, and we talk a lot about the downside, but there are a lot of players. Maybe they've gotten burned by the recent reluctance to break through 30 to the downside. They've decided to go for the upside. I'm not sure if 80 is the strike I would choose, but c'est la vie. A lot of upside players out here. We do have number 2, the 25 half puts in April, 25,000 of those. Number 3, the March 41 calls, 24,000 of those. Number 4, the April 27 puts, 22,000. Followed up number 5, the March 27 puts for 22,000. That's always been a popular strike, the 27 strike out there. Then 69 calls, number 6. So a lot of upside. And number 9, 17,000 of the June 75 calls. So maybe a 75-80 vertical ratio kind of went up out there. And number 10 out there, the June 40 calls. So it's mostly upside to the tune of about 1.1 million contracts outstanding. About 700,000 on the calls and about 400 some odd thousand on the puts. So calls outpacing puts out there in VXX right now, which today at least was the savvy trade, at least for a short amount of time. In fact, looking at the big trade that went up out there today, it was pretty much upside call gobbling up. It was the April 34s. These are the weeklies, though, expiring on the 5th. 5,000 of those going up for 75 cents. Actually, I take that back. That was someone, looks like someone deciding to do a little bit of yield harvesting, taking advantage of the pop. They sold those on the bid for 75 cents 5,000 times. So not gobbling, but actually crushing the vol. That was opening as well. So opening to the dark side there on the 34 strike on the weeklies. And then we also saw a 1x2 put spread. This one I'm perhaps not as excited about, Mr. Meatball. This one is the March 29th, so also out in the weeklies. This is the 30 half, 27 half, 1x2 put spread, buying the 30 half puts 2,000 times for $1.15 through the offer, a nickel through the offer, and then turning around to crush out 4,000, so 2x of the March 27 half puts for a nickel. Mr. Meatball, I'm guessing you're not a fan of that one.
I mean, why then? Why bother with the nickel?
Why would you bother doing that? Why would you do that? You're just adding.
Right. Maybe unless you're closing something, I don't understand it. I just nonsensical. What I will say is that in the open, when we were down only about 15, there was a buyer of the April 37s for some size, and he did pretty well on those. So good job, you. But yeah, the 1x2s I see in VXX all the time, but usually it doesn't involve reducing the cost of your long put by, a nickel, by 10 cents. Like sell something with some value if you're going to do that. Just doesn't make a lot of sense.
Yeah, that gets you in a world of hurt for a dime. I mean, that's not getting you anything. So yeah, interesting stuff. Speaking of which, I had a good bit of. I told you a lot of people have been chiming in about VXX this week. I had a good one from a long time listener, which kind of brought a smile to my face. They wrote in saying, "Hey, they're getting in. I forgot when this was, but they're getting back into the VXX puts to the downside." And I wrote back and said, "Hey, that's great. Just you have to have a plan for when it moves to the upside. What's your plan?" And they wrote back and I said, I have to figure out your upside hedge when things go bad. They wrote back and said they hedge with alcohol. I said, you know what? Okay, I guess that works. So VXX, you load up on the downside and you hedge the upside with alcohol. There we go. What could go wrong with that scenario? That was, I think, my favorite bit of listener commentary on VXX this week. Let's move on really quickly. We still are in the throes of earnings season. There was some earnings popping off this week. Some of the bigger names was Micron on Wednesday, Nike on Thursday. This morning we had Tiffany before the bell. Tiffany also disappointing, folks. I think there was a bit of earnings underwhelming that also helped fuel today's sell-off. Nike, remember, we have the earnings move and earnings move results reports available for you guys completely for free over there at theoptionsinsider.com, courtesy of our friends over there at Oratz. They crunch all the numbers for you, so you don't have to. Let's look at a couple of them really quick. Let's look at Nike. Nike was coming off on the 21st after the bell. They closed going into their announcement at pretty much 88 even, and they were pricing in a little bit shy of $4, $3.89. And it looks like they moved at least, again, this is in line with right after the announcement, so this doesn't have intraday movement baked into it. But in the immediate blush of the announcement, they sold off a little bit more than $4, $4.07. So a little bit north of their straddle, but not terribly outpacing it to the downside. Pretty much in line with their straddle. As the day has gone on here, they've sold off a little more. They're off 5 1/4 now, or about 6%. So they've outpaced it a little bit to the downside, but not a huge miss, but still obviously continuing to weigh on the markets today. So you can check all those out for yourself here on, I don't have Micron, but you can check that out on the website for you as well. Meanwhile, let's keep on rolling. Let's get into some questions. It's time for a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail, the portion of the show where you guys get to dictate what we talk about, and your questions are many and various. Let's see how many we can get to here on the show. Let's start off this one from the Brew Master. Brew Master 3, actually. He wants to know, what does all of this mean for the vol market? Is this a problem for new vol players and products trying to get into the space? And he included in his question a link to an article. I forgot where he sent this in from, but the headline was Vol Spike Prompts Reforms at Equity Options Clearinghouse. This is a big breakdown. I think this might have been FT, actually, breaking down what's going on over there at OCC. Remember, there was some consternation post VIX Apocalypse last year, back last February, with the way they calculated their models for VIX. VIX actually had to shut down for a while, and then also in terms of dissent, I think for half an hour. And then the models at OCC, on top of that, the models that OCC was putting out there in terms of risk models was just demanding exorbitant amounts of capital to stay in the game. And a lot of people said, hey, maybe you should rethink those. And OCC, to their credit, came out and said, you know what, our models are a little bit dated. And like they give an example in this article here from one clearing member, said their margin demands increased tenfold overnight from 120 million to nearly 2 billion. They say that even though the OCC did not actually require them to surrender 2 billion in capital, that would be a bit onerous. So yeah, and John Davison is a new CEO over there, admitting that their model, quote, overreacted. And they're looking at, they said the current model makes conservative estimates of the risk. It will be adjusted so it doesn't do that anymore. That's an interesting statement. Obviously, you don't want them to get too crazy on the risk-free side, but still, an interesting question. John, you guys kind of just went through all this with the approvals and all that stuff. And this isn't the first time. I talked to a lot of other people in the vol space who have products out there, and they say they've come up against roadblocks at the OCC with the modeling side in the past. So maybe we'll start there. How difficult was it for you guys to get spikes modeled and approved through all the systems they have over there at OCCA? And then B, what do you have to say here for our listener who wants to know what maybe these changing of models, what it means for the space going forward? Is it going to be harder to get new entrants into the space maybe as a result?
We had a good partnership type experience with OCC. They worked very closely with us from Mr. Davidson down all the way through, right down to their development team and Amy Lawson and her people. And it was a good experience. Obviously, new product, OCC kind of reinventing itself, and it's as we're going through this process. And we got to the point where we got the product out. We're still working closely with them. The fact that VIX had kind of forged this path a while ago, but it was certainly made harder coming off of last February's action. But all in all, it was good. I think to the question you posed, I think what I'm seeing as I kind of get fully involved in the volatility space is the clearing firms, the retail firms specifically. We've seen this. They don't want to let any of their customers do any time spreads. That the time spreads in equity options, and you guys live this world, you know it better than I, as opposed to the time spreads in the volatility products are very different. And that's one of the big things that I've seen, I've learned in the last several weeks is, that the clearing firms keep their eye on that, and because people don't quite understand that, or they don't get it right. But other than that, good experience, and I think they're going to be a great partner for MIAX as we roll out more functionality and more product.
And these updated models, they're not requiring anything additional from you guys in terms of tweaks to spikes or anything along those lines?
No, I mean, certainly, regulation and, being on top of your game is higher than ever. And, MIAX was built in kind of the post-2008 financial world. So we were built in a way that this is the norm for us. Our own protections and our own processes are, most of the time we see we're ahead of where the rest of the market is. So this wasn't a problem for us. And, ultimately we look at it three ways. Is it good for the market? Is it good for the customers? And can MIAX be efficient as an exchange in that environment? And we think that all three of those things are going on right now.
There you go. All right, we got one of our listeners, your old buddy, Mr. Brandt, Mark. He says he recently sold the 32-day 15-11 put spread, I'm assuming he means in VIX, to buy the 21 calls for a nickel. So it sounds like he's getting on board with the downside to finance upside train. I don't know. Are you a fan of this one? I guess it kind of depends when he put it on throughout the day here.
Yeah, no, I don't think it's a terrible trade at all, and that's not a bad way to develop a long position in an elevated VVIX environment, right? So I think that makes total sense, and I'm having met Mr. Brandt straight up, I can tell you, good trade, good job, guy. Proud of you.
That's right. You two did meet, didn't you?
Met him in Vegas.
Dark days for the volatility space when the two of you.
Yes,
you
nice
two
guy.
Came into the same orbit. Let's see here. Nico Lee wants to know. There are so many questions swirling around VIX right now. How do we avoid these types of problems in the future so people can have faith that the volatility space isn't rigged against them? Well, I think, Simon, you kind of just went through this. You were in the process of creating and getting approved a new volatility product in kind of the wake of all these issues with VIX, which is one of the reasons why I think you came up with that price dragging mechanism. So what do you have to say here for our friend Nico? What can we do in the future to maintain people's faith in the integrity of the products coming into the vol space, sir?
Oh, well, that's an incredibly apt question. Maybe
we have a savvy audience here, Simon. They're on top of things.
Well, I mean, look, it is perhaps the most pressing issue, isn't it? Right? I mean, with volatility trading, if you think about its history, it's been absolutely fantastic. 2004, things began, and then it just grew and grew and went from strength to strength, particularly when the ETPs came around. Of course, the hiccup, as we mentioned earlier in the show, it was came about 18 months ago with an article that was written the auction process, and so that was certainly top of mind for us because ultimately, if you're going to create a product and you're second to the market, you want to do things that maybe with the benefit of hindsight you can improve, and so obviously we have that benefit. We can look over things and see what's good and what's not. And for us, clearly, the most important thing was the settlement auction. People have to be confident that, this thing is going to be reflective of the right, market conditions, that it has a low chance of having these so-called bad actors, manipulate things, not saying that's what's going on, but I'm saying that those are the things that are top of mind when you're trying to create a product, right? Because you want to make sure that you do the best that you can on that. Now, I think we're fortunate. I think, John Smolin touched on it earlier in that one of the fortunate things about using SPY is that every one of the 16 options exchanges in the US lists it, unlike SPX, which is obviously exclusive to CBOE. So in that regard, if somebody is trying to do something wrong in the spike settlement, 15 other exchanges will see that and say, well, hang on, that's 8 cents bid for that really far out of the money put on the MIAX auction. On my market, it's a 2 at 5 cents. So clearly the weight of arbitrage of the market will come in to bring our prices into line. At least that's the way we've designed it. So yes, it's a very appropriate question, one that people are asking and one that we've tried to address.
John, anything you want to add on that?
And I will say that.
Go ahead, Mark.
Yeah, and I will say that after that article came out and kind of some of those weird prints, the people at Cboe do actually take this seriously. They're not just sitting their hands saying, well, la-di freaking da, everything's great. And I can tell you that their research department is when these different accusations have come out, there are people that take that very seriously, and and are trying to make sure that is not the case and that it's not something that's easily done. And they have made changes on their end to try and make the process harder to do this to. So, for instance, one of the problems was at the end of the day, all these orders would go in, and the only people that could respond after, I believe, like 8:20 Central was the market-making firms. Well, they've reopened that up, where you're now able to enter certain types of complex trades to, trade off against these opening orders, and that has provided what I think is at least a little bit more liquidity into this. The big problem with that print is that theoretically is that it's taken advantage of problems with liquidity on the open, right? One of the more difficult things to trade is market on open, and all of these indexes are designed around market on open. So, and you listen to what Simon said. I mean, that was probably one of the first things they thought about is how are we going to settle this thing. Exchanges take this very, very seriously, and the worst of the manipulators, if there was, probably cost the general public almost nothing and is more of a gripe with different market making firms. So what I would say is, more importantly, one, you're a retail trader. Why are you trading expiration? Two, you're a retail trader. You're probably not on these guys' radars. They've got better things to do. They're not out to screw Johnny 9 lot. They want to screw Johnny 9,000 lot. They want to screw size Johnny, not Johnny 1 lot.
They want the big things. But you're right. We said that many times here. Even for all the Sturm and Drang that's come up about the settlements over the last year or so. At the end of the day, we've always counseled people you should have no exposure to this whatsoever. Particularly if you're a retail guy out there trading, you can close out ahead of time, and then none of this matters to you. So that's the easiest way around all of this. Meanwhile, it's time for us to go around the end of this segment and keep on rolling into our final portion. As you can see from this week, clearly the most difficult portion of the show. It is time to peer into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we attempt to divine what the ever-fickle volatility gods have in store for the coming week. And they were fickle indeed again this week. Coming out the end of the show last week. Remember, it's not for the close of the day. It's for the end of the show, right around now 2 p.m. Central, 3 p.m. Eastern. And last week, we were all predicting less vol, but to different degrees. I was feeling, actually, I was on the higher end. I was 13 and a quarter. Mr. Meatball, it wasn't Andrew, was about not 1240, 1237, an oddly precise prediction from him. And Simon was feeling the most downside of the bunch. He was feeling at 11 and a half. And as you recall, listeners, I thought something was going to lure us back to the upside. I didn't think it would be to this extreme, obviously. I was in the 13 handle, but I was not feeling the endless 12 and 11 handles that everybody else was feeling. But that said, I'm still over 2 handles away, about 2.5 handles away. So this is by no means is it a victory for me either. So let's just call it a no one wins week, which we do have those every now and then. And since I'm a charitable guy, first off, I'll give you the chance to demur. John, I'm going to assume you don't want to play, but I'll give you the chance. If you want to play, sir, or if you want to give me the standard disclaimer, now is your chance.
I'm going to give the disclaimer. I'll go last, if anything, but I'm the new guy here. I'll listen to the old pros.
That's fine. You know, I just don't want to get you in trouble, but I want you to feel like you can play if you're feeling up to it. Since we all lost, I'll be nice. I'll let Simon. You were the farthest away, so I'll give you a chance to redeem yourself first here this week. What are you feeling for spikes and VIX Cash this time next week, sir?
Oh, man, you always make me go first.
I'm charitable. I'm a nice guy.
I'm going to go... I think it's maybe more of a temporary blip. I think this is a bit of a spike we kind of had to have in the VIX, just given what's going on. But I'm not sure that's lasting. I think that for at least in the medium term, you're still probably going to have people pretty okay with the way things are, unless, there's some material change. So I'm going to go 13.55.
There you go. So seeing a nice little sell-off here in vol to the tune of over two. Actually, VIX Cash over 16 handle now. So over almost 3 handles. Actually, no, about 2 and 3/4 handles or so. So still a decent move to the downside out there. I'll be charitable again. What a nice guy I am. I like to go first usually, but I'm going to be a nice guy. I'm going to pigeonhole myself into some terrible pick now because I'm going to go last. But I'm going to be nice. Mr. Meatball, you were the second farthest away, so I will allow you to go second.
By the way, when was the last time John Smolin described himself as new guy? Let's start there. Right? I mean, seriously.
Well, with you guys, I am the new guy. So.
Yeah, right. All right. I'll tell you, today I was buying the April 3rd 13.5 puts for a dime, and I think those are a steal. I'm very glad I did, and I think I'm going to make money on those. I don't. However, for the week, this may take a little more time than a week to work out, so I'm going to go 12.37.
So you think it's going to take longer than a week to work out, but you're still 12. You're still the 12 hand. Okay, I just want to make sure I got that clear. Okay, right. So you're keeping things exactly the same as it was last week. The deep analysis. I also feel that we're going to be working it out, but I also feel it's going to take a little bit longer than a week to get all this squeezed out of the system. So we're close to 16.25 or so out there in VIX Cash, and I'm going to say we're going to come off 2 handles by this time next week. I'm going to say 14.25. So there you go, listeners. There's your nice strip. This time, Meatball's on the downside. I'm on the high end again. I'm playing the Russell roll this time again, which is interesting. 14.25 to the upside there. Then we've got Simon actually in the middle this time with 13.55, 13 double. And then we've got rounding out the bottom there. We've got Mr. Meatball at 12.37 yet again. All right. Unfortunately, or maybe fortunately, depending on how you felt about the show, it's up to you. That music means we've come to the end of another epic journey through the world of volatility. We talked settlements. We talked VIX. Easier for me to say. We talked spikes. We talked VIX Cash, VIX Futures, the options, what's going on in the space, VXXB, your questions, all sorts of fun stuff. It was a really fun journey. But let's go back around the horn before we go. Let people know what else we have cooking that may interest them. John, you're our newcomer here today, so we'll start with you. People want to learn more about spikes. Maybe they want to reach out to you because their retail broker still doesn't have it listed or something along those lines. Where should they go? What should they do, John?
Yeah, well, we have, through our website, we have, you can connect directly to us. They can reach out to anyone at MIAX. We respond to every inquiry. We've got the material we can get to you, and if you're a retail firm or you're a trading firm, we'll come see you and talk to you. And we have the luxury of having the founder as part of our business line, and Simon, and we have Shelley, myself, Joe Bracco, and many others. And we want to get out there and tell you what we're working on. So we're available, and just reach out to us, and we will connect.
And Simon, same question for you. If you want to give people maybe a little bit of a tease of what's coming down the pike, maybe they want more information about the mechanics of spikes, something along those. Maybe they want to hit you up with a question. Where should they go? What should they do, sir?
I'd love that. So you can go to our website. It's called t3index.com. Leave a question for me there. There's a whole bunch of resources on there as well. But, yeah, certainly happy to provide information about anything and everything that I can opine on.
And Mr. Meatball, if I want to maybe take a webinar on all things VIX related, maybe I even want to take a master class, where should I go? What should I do?
Just go to optionpit.com every day and read our blog and watch our videos, because the stuff we write, we've been so right. And so like last Friday, I put out my trade idea of the week, and I said, you know what? Apple looks like it's going to go higher. I like buying the April 185 calls. Guess what? Though $3.75 to $12. And I'm not saying every trade I do is like that. Now, I am a genius, but they don't all work out that well. Just read our content. We're going to give you something worth thinking about on a daily basis. So
I remember last time you came out
every day.
I remember last time you came out and just recommended upside calls. That's a very rare pick for you. That's not usually.
It is. Well, I try and when I'm putting something out to like 38,000 people, I try to keep it pretty simple to either, buy call, buy put, just because,
Yeah, if you tell them ratio iron condor swap, it's
right?
not gonna fly.
Some jerk buys. If I put out selling a 1x2 and it goes wrong and some jerk does it, and loses, whatever. I don't want to deal with the headache. So. That would be the main reason.
There you go. No headaches. Just check it out. Optionpit.com to learn more. By the way, your compatriot there, the Rock Lobster, wanted me to give him some credit because he said he was telling people to fade some of their short vol positions yesterday, and he's telling people in his newsletter subscribers today that they should start unwinding their upside. Hopefully they've done so already, because we're already starting to see the retreat from those highs. So he wanted to get his due props. I shall give them to him, Mr. Rock Lobster out there as well. And on behalf of the Greasy Meatball and John and Simon, who are nicknameless, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We could do a whole all-question show. Maybe we'll do that someday. It'd be kind of fun, because your questions are all over the place, which will make some fun. And, of course, for listening live and all the other fun stuff that you do, keep them coming. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.